Yo, what is up, traders? Welcome to another week of analysis with your favorite trader, the Prop Firm Kid. And today I'm going to be looking at my three favorite assets, which is gold, EURUSD, and the US 500 for potential swing trade setups. Now, if you're a day trader, you can also use some of these high value key levels that we identify in your day trade setups as well. And if you haven't yet, you can go to my free Discord where I post swing trade setups, and they have just been cooking last week. I'll put the link for the Discord in the description of this video. Okay, without messing around, let's look at gold first. I'll make that full screen there. Now, I'm going to pull up the software here that I always pull up. It's called the EdgeFinder. I'll leave the link in the description as well. Basically, it just takes all of the recent economic data reports and gives it a bullish or a bearish score for the asset. Is very useful for swing trading because you know that fundamentally you will be on the right side of the trade. Okay, so first we're going to look at gold here. Now, gold's interesting because we are again at a bullish score of 6. Okay, so 6 is a very healthy bullish score. But if we look at the history here of gold, we can see early in the month, this is the last 30 days of scores. Early on, we were very bullish and we started losing momentum, and now we are gaining momentum again, and we ended the week at a 6 for a nice bullish signal. So if we look at gold here, we can kind of see how that fluctuation in score has translated. I'm just going to zoom out and squish this together. I want you to notice something here, that we've been in like this range. I would call it a range for gold right here, where we've been chopping around back and forth like that. Okay, now I'm going to identify this as the range. We had a couple fake outs, but nothing crazy, right back into the range. And it's very difficult for traders to make money in these conditions because you're whipping back and forth. You don't know which day is going to be red, which day is going to be green, and even the candle price action, if we were to break these down on lower time frames, they are very volatile, whipsawing back and forth day after day. So if you've been losing money on gold the last 2 months or so, don't sweat it. I think a lot of people have, but we can identify this range and kind of come up with a game plan on what we should do here. So what I'm going to be looking at is I'm going to be looking at a breakout of this range, just because gold is fundamentally bullish right now, and that could change over the next week or so, but we can only go with the current data we have to make our game plan. So I would like to see gold kind of climb up, break out of this range again, retest it, and then go to the moon, right? And we've broken out strongly once, but we weren't able to get that retest. Okay, and back then here, this wasn't really even a range developed, but it would have been a nice technical bounce off of this level of about 33.80. So I'm looking for a retest of about 33.92. If you wanted to go more extreme, you could wait for it to retest 3400, which is a very beautiful psychological number right here. Okay, so you could do that, and then if we zoom back a little bit, we can see that this is the all-time high right here. The all-time high is 34.94 roughly. So if you're setting up your swing trade, we could do a little something like this. Long position, breaks out, retests, right? And we could target that 34.95, something like that right there. And for stop loss, usually if we look at like the ATR here, we can kind of go on the kind of the above average for the 4-hour ATR. I'm going to move this so you can see that better. So that's going to be around $25 you could do for a stop loss. It's very healthy. $25 to $30 is pretty healthy for a swing trade setup on gold, okay? So that gives you enough room, enough breathing room for you to stay in the trade. And that's going to be a nice 1 to 4 potential risk to reward trade setup, okay? So that right there is the key. Now, let's just say hypothetically real quick that the economic shift and disfavor gold. Now, we could do the exact same type of idea with shorting gold. And it would be nice if, let's say we make it to the top of this range, right? And then the economics kind of shift bearish on the EdgeFinder, then we could look for shorts at the top of this range, just because we know it is such a strong level to reject. Or you could also target that 3,400 psychological level to short, right? Because we know we could come down past the bottom of this range and possibly test these previous technical lows that are really, really dominant, especially this zone right here, which is going to be around 31, let's just call it 31.50. Okay, so long term, if it's bearish, 31.50 could be a beautiful level to target. But for now, with the current economic data we have, we're looking for longs. We're looking to break out of this terrible range that has been costing everyone money and retesting these all-time highs. Okay, all right, next, let's go to EURUSD. Now, EURUSD, I'm just going to close this here, make that big screen. We had a beautiful swing trade setup on EURUSD last week, posted. I think I got a 1 to 2 risk to reward just because of the strong sudden pullback, but that's okay. A win is a win. And it looked a little something like this. This was my analysis from last week. And we were looking to enter off of this 618 level right here. And this was the swing trade setup entry. Okay. So obviously we had some news come out that kind of created this crazy candle. It actually whipped down first, and we missed the stop loss by like 3 pips. So we got a little lucky, but that's why we used sufficient stop losses. And it whipped up and it almost hit the TP, but I was trailing the thing by a 1R. So it ended up whipping back down and closing at a 1R. Some people are still in the trade and the profit by 1R, but for now, this one's closed. So actually, I want to show you a couple things that are interesting. I'm just going to close this so it doesn't confuse us. Now, if we're looking at the trend, the overall trend is bullish, right? It's pretty bullish, especially if we look at the daily chart here. It's very bullish, right? But let's go back to the EdgeFinder, and I will show you something interesting under top setups here. EURUSD is actually neutral in the scoring now, and it's gone. If I go to the history, EURUSD, we can see that over the last 30 days, we have just been losing momentum on this thing, right? And now we're back to neutral. We were at one point a 10 bullish score, which is almost as bullish as you can get. And now we're at a 2. So this thing is losing momentum economically, right? So I am no longer really interested in looking for longs, even though overall it's still bullish. But if we're kind of zooming in on the 4-hour chart, we can see that we are really in a sell-off here in terms of bearish momentum, right? We have this kind of steep slope. And if we look at this situation here, usually trend lines aren't too effective unless they're extremely obvious, right? Unless they're extremely obvious, then I believe in trend lines on the higher time frame. Okay, so we can see here that we broke this trend line, right? And we tried to get back above it. It got rejected completely. And now we're testing this key level. So this could be a really interesting setup to actually start looking for shorts, right? If we set up a short where it retests this trend line here somewhere, right, to get an optimal high value entry, then we could start to target this unknown territory down here where we have some really nice technical key levels, especially right here. Do you see that? Isn't that a beautiful clean key level? And this is a very relevant level because we found buyers like you wouldn't believe right off of that level. It was a trend line. It was a previous resistance. The whole thing aligns. The stars align here. So this could be an interesting level to target around 1.145, let's just say. Okay, so that's one play you could take it. And for the stop loss, we go back to the ATR here real quick just to see what a reasonable stop loss would be. We want to go kind of mid-range here. 35 to 40 pips is very reasonable for EURUSD. So let's just set up a trade like that, 35 to 40 pips. I think I like 45 a bit more because if we were to enter here, that actually gives us a little buffer from the top wick of this candle. And sometimes when you get rejected really hard, you'll retest that wick, right? And if we're actually targeting this high value key level, that could potentially be a 1 to 5 risk to reward trade setup. Okay, obviously you can trail it by 1R once you're in the profit, but this is just such a beautiful technical trade in my opinion. And with that loss of momentum on the EdgeFinder, then that could be beautiful. So I'm not currently looking for longs unless we kind of break this trend line, both of these trend lines, and we create some bullish structure off of it. We took our money already going long. Let's take our money and run. Let's not push our luck. Okay. All right. Last one is US 500. Okay. So the US 500, actually pumping in a bit of an irrational way, pumping while gold is consolidating, which is really interesting, right? And we did close at this all-time high. Well, we had the all-time high of the week, right, from the previous week. So there's a couple situations that we can look at doing here. And the first thing is just to identify this range. I'll identify this range like that, okay? And we did break out of that range. We retested, we got a little bounce, which is a good sign, right? So this actually is kind of valid to go long here, but because it's the start of the week, we definitely want to see some kind of weekly lows. We can't expect that the weekly candle is just going to be a pure God candle to the upside, right? I imagine we have to sweep some kind of lows in this range to continue up. So a good action plan might be to wait for this thing to come to the bottom of this range and then work itself out. And if we look at the EdgeFinder, once again, let's go to top setups here. And you can see that the SPX is very bullish at the moment. And it's just been bullish for so long. If I pull this up on the history report here, we can see we're a little bit choppy, but we've been sustaining this bullish score for quite some time. And even when it was dropping a bit, we were still very strong. Like, it was still running up, and now we're even in better shape now. So, just from a technical standpoint, it would be nice to get a really high value entry off of the lower side of this range here. And I think that would be ideal, right? I'm not going to wait too much for a pullback unless the economic scoring changes a bit. For a pullback level, I can't even mark a Fibonacci because I don't know where the highs are here. If we wanted to run a fib to the top of the range at least, then this 382 level, if you wanted to be very conservative, if you wanted to wait for that 382 level, that could be something you do, right? But I'm going to look for entries at the lower side of this range and continue with these all-time highs because there's no evidence yet that price should collapse, right? There's nothing that should say, oh, sellers are about to jump in. Let's start shorting this thing. There's no reason to short. So even if you shorted and even if you were right, that would not be a good trade, in my opinion. Okay, so let's just set up a quick trade here to see how that would look like, just so you can see the levels. So I would go long like right here. And for the stop loss, we can look at the 4-hour ATR. Once again, let's zoom out a little bit there, and you can see that the average is around $25, very similar to gold, right? Very similar to gold. So a $25 to $30 stop loss is very fair in this situation. And we could target, if you want to be conservative, you could target the all-time high, or you can start trailing there and see if you can catch a new break of an all-time high. Okay, so we have a lot of potential with the trade setup if we get a valid entry. And if this one fails, if this trade fails, but the economics still look bullish, then my next entry is going to be there. And I've done this before, especially on NZD-CAD last week. We had a really strong support level. Let's see if I can pull it up for you here and just kind of show you before I take off. I think it was NZD. I think it was NZD-CAD. Yes, it was. Okay, so basically what happened was we had this insanely strong support right here, insanely strong level, right? So I took a long there, and we did get a bounce right here, but then we just got it collapsed right through. And I said, okay, if this first trade fails, we're going to target this previous low here, which is also another high value key level. And wouldn't you know that we are just running at we're running at a 2R or more on this trade already. And the entry was so perfect. We were like 1 pip off, and I posted this thing right when I entered. So there were a lot of people that got in sniper entry. Some guy saved his $100,000 account when he was $50 away from drawdown, just because he got an absolute perfect sniper entry. So that is a great story. Maybe I'll tell it in the Discord there. But yeah, that's my weekly analysis, guys. Let me know in the comments what you like, what you think about it, what you're looking at, because I love talking to you guys as traders. It helps me get better too. And please come into the free Discord. So much value in there. I also have a VIP, but unfortunately I'm closing the doors for that for now, starting tonight. So probably while you see this video, it's going to be too late. But yeah, appreciate the time, and I will talk to you guys later.